Okay, I think we are live right now with the Anderson Report. Thank you, everyone, for joining us tonight. And never a dull moment in the stock market. We certainly got a full dose of that today. Stocks came out of the gate this morning pretty much right where they left off last week, with the big momentum names on the NASDAQ screen leading the charge. And without any hesitation at all, we were up 1.5% in the first 30 minutes of the day. Built on that for the first couple hours of the day, maybe around between 11:30 ish, 12 o'clock. At one point, the Nasdaq was up over 10,800. The Dow was up over 26,600. S&P was up above its June highs, I believe traded as high as 32.34. The closing high from that 4-day stretch in June, June 5th to June 10th, when the market put in the highs in early June, was 32.31 for the S&P 500. We got a little bit above that midday. And then there were a number of comments going around either on the internet or just with DMs or text messages back and forth with some people I was talking to that, okay, look, I get it. This is the internet traffic trade. These are all these stocks, these momentum stocks in NASDAQ. They're a beneficiary of the virus, and everybody's spending 22 hours a day on the internet. But I'm almost ready to say enough is enough. Well, the market's pretty much kind of glided through into the early afternoon. And again, this was really in spite of negative headlines on the virus over the weekend, big outbreaks of cases in Florida, in Texas, in Maricopa County, Arizona, which is the Phoenix area, in pockets of California. And the messaging really was, some of these places are probably going to get a little bit stricter with their social distancing guidances on how much they're going to allow businesses to operate, et cetera, et cetera. And the market started, but I really, and then there was this comment late in the day, not sure exactly when it was put out, that Governor Newsom in California was going to restrict indoor dining and a lot of other indoor activities for businesses in the state. I really don't think that's the only thing that set the market off. I just think this was a little bit of a lot of people have been watching these big momentum stocks very, very closely as they have just gone up relentlessly, even at a faster pace than the NASDAQ composite has. And they watched the market get up to NASDAQ 10,800 at 11:30, kind of flatlined into the early afternoon. And when it couldn't go a lot higher, they said, you know what? It's time to peel out of a few of these things. So then we had a big reversal in a very short period of time in the likes of Amazon and Tesla. By the end of the day, Tesla, which had traded within 5 points of 1,800 late morning, early afternoon, closed below 1,500 at 1,483. That's a 300-point reversal off the highs for Tesla. Maybe about not quite 20%, maybe a 16 to 18% reversal off its highs in one day for Tesla. Clearly, one of the stocks that has been driving the NASDAQ higher and getting a lot of attention daily from the financial media. Amazon, traded at 33.44. That's $3,344 a share uh, at its high early in the day. It closed right around the 3,100 level. That's almost a 250-point reversal, a much a less percentage than Tesla, but still about just ballparking it here, 7.5, 8% from its highs of the day to where it's closed. Apple traded within half a dollar of 400. It went out at 382. Clearly, not nearly as extreme of a reversal there. Apple is very, very, very cash rich, and that's always going to give it some support on any pullback. Netflix, Netflix um, traded as high as 575, closed at 525. Not quite a 10% reversal, maybe 8.5% or so. But clearly, Netflix is right in the crosshairs of the internet traffic trade as a major beneficiary of it. So, uh, you had reversals in plenty of other stocks. This was certainly not a bloodbath on the way down. I think it was a well deserved uh, day, or really 2.5 hours, of profit taking, which we may see more of tomorrow for some of the stocks that have just had a little bit too parabolic of a price climb and were uh, overdue for a pause, if not some profit taking. Certainly, some profit taking in Amazon uh, and Tesla. But to get into the major averages here, Nasdaq traded as high as 10,820 intraday. It had ended up with a close to a 4% reversal, closed at bear with me just one second, closed at just below 10,400. That's a little over a 400 point or 4% reversal off its intraday highs. The S&P 500 went out and closed at 31.55. It traded as high as 32.34. Again, big resistance level for the S&P 500 back in that 31.85 range, which is right where it closed on Friday, to the 32.30 range, which was that 4-day stretch of highs that the S&P put in right after the May employment report, where it traded from it closed anywhere from 31.98 to 32.30 ish, 32.31 over a 4-day stretch. We got up above that, failed, came back, closed at 31.55, but still above the 31.50 level. Um, the next couple days, clearly with earnings season starting tomorrow, will be very interesting. Crude oil also had a little bit of a reversal. There was some news on crude oil today, and the news was that the OPEC plus countries are now talking about uh, letting production levels up a little bit. Demand is up significantly as a lot of countries have come out of the coronavirus induced economic shutdown. So I really don't think this is a terrible story for the OPEC plus countries to be turning on the spigot a little bit for oil. The global energy market has worked off a tremendous amount of the oversupply that was built up, very highly publicized in May, when at one point in time oil went negative when the June contract was expiring. and then in also even in June, before we really got fully back engaged in the economy. Not that we're even fully engaged yet, but oil has had the big move from the mid to high 20s up to about the $40 level. It closed above $40 for 6 or 7 or 8 days right at the beginning of July. Failed for a day or two last week, closed back above 40 on Friday, closed a little bit below it today. Look, if we trade in this 38.42 level for oil for the rest of the week, I think that's okay. The energy sector held up pretty well today. Um, it was might have been down 0.5% or something like that. Oil closed 39.50 ish, a little bit below $40. I do think 40 is a little bit of a threshold level for oil. Um, and it will catch some headlines that, OPEC's going to turn on the spigot a little bit. I don't think it's a terrible thing. So on the day, NASDAQ down 2% after being up 2%. That's a 4% reversal. S&P 500 down just less than 1%. The Dow Jones pretty much unchanged, but a 500 plus point reversal off its highs. Had traded above 26,600 midday, closed at 26.85, but again still turned back at its 200-day moving average on a closing basis of, let's say, 26,240. So really, we closed up 10 or 11 points on the day, but turned back. Even though we traded at 26,600, we could not close above the 200-day moving average on the S&P 500. We'll see how it reacts the next time it makes a run at that 200-day moving average. Maybe it'll be tomorrow. Maybe it'll be sometime this week. We'll just have to see how this plays out. Earnings season starts big time tomorrow morning with the banks. Everybody knows they're going to have numbers that are way down for the second quarter, but it'll just be very interesting to hear their optimism level on the economy reopening, and on what their loan portfolio looks like going into the third quarter, and of course the whole second half of this year. So one other thing that I really want to mention is that I typically don't give a lot of credence to or pinpoint intraday levels on the market, other than on days like today, when those levels represent a big reversal point for the market during the day. And we did have that today. You had the NASDAQ extend its rallied maybe 9 of the last 10 days. It had posted new highs maybe 6 of the last 7 days. It had been parabolic up since the correction June 22nd, 23rd. And it was just extended to the point where it was a little too much ahead of itself. So, you might say, how much ahead of itself? Well, a lot of times I like to look at the major averages as a gauge on how overbought they might be when you've had extended rallies that have gone on for a long period of time. I like to go back over the last couple of years and see how far they are above their 50-day moving averages, which is, I've mentioned the 200-day moving average a lot. The 50-day moving average is trails a lot closer to current prices because it's taking the last 50 days of closing prices and giving you a moving average for that. The 200-day moving average is a little bit less than a year, and so it will plot out on the chart with on a much more gradual basis. It takes a longer trend to get the momentum really moving that 200-day moving average than it does the 50-day moving average. So let's go back to February 19th, just before the news started to hit on the coronavirus, when the week when the Nasdaq, the Dow, and the S&P had all posted fresh all-time highs. The Nasdaq, I think, 4 or 5 times in 7 or 8 days. The Nasdaq back at that point in time on February 19th was 7% above its 50-day moving average. Then, of course, we had a very large sell-off that bottomed on in the May 23rd, maybe a day or two before that. And then we had a big rally off the lows. On June 10th, when the Nasdaq closed above 10,200, closed above 10,000 for the first time. It closed at 10,020. Kind of a big deal to close above 10,000 on the Nasdaq. The all-time high from February had been 98.17. So the Nasdaq closed 200 points higher. His first close above 10,020. It was 15% above its 50-day moving average. I went back after the close today and looked back to the last 3 or 4 years on the chart. I could find nothing that would even come close to that. Well, what happened the next day on June 11th? The Nasdaq went down 5%. That was the day when the Dow went down 1,800 points. The Nasdaq went down a little over 500 points. The S&P went down, a similar 5 to 6%. Huge sell-off day in the market. That was a reaction, a technical reaction to a very market that was extremely overbought in the very short term, because it did recover, and then the Nasdaq closed above the 200-day, above the 10,000 level for the second time ever and the third time ever, back to back on July 22nd, on June 22nd and 23rd. At that point, it was 10% above its 50-day moving average. Then we had a pretty significant sell-off the next day, not nearly like the 5 to 6% sell-off on June 11th, but we were down about 2.7%, over 2.5% on the NASDAQ. Okay, so on Friday, the NASDAQ closed 10.5% above its 50-day moving average. And at its intraday high today of 10,800, it was 12.5% above its 50-day moving average. Now, when I say it was not really a bloodbath sell-off on the way down, the reason I say that is we get what we call market breadth numbers every night at the end of the day. On the New York Stock Exchange, the market breadth was negative, a little less than 2 to 1. There are about 1,850 decliners, 1,000 advancers. If you had a bloodbath sell-off day, those numbers could be 3 to 1, 4 to 1, 5 to 1. If you had an extreme down day, like we did on a few days in March, when the market was just cascading to the downside at the beginning of the coronavirus shutdown, we had days when the advanced declines were down 8 to 1, 10 to 1, a handful of them. Okay. So even and we also get advanced decline numbers for the entire NASDAQ composite. The NASDAQ composite was down 2.1% today. It had a 4% reversal off its high. The advanced decline numbers, you had about 2,200 decliners, about 1,000 advancers. So a little bit better than 2 to 1. Now, sometimes when you get big intraday moves, most of the decline took place in the last 2 to 2.5 hours of the day. Sometimes those advanced decline numbers won't reflect the extent of the decline. They might catch up the following day. That's why I think the breadth numbers, the remainder of this week, are going to be very important to see if the people that are taking profits in stocks that really deserve to have profits taken, some stocks that have just had some astronomical moves, even a company like Amazon that's just hitting on all cylinders right now. Let's keep in mind that when the coronavirus first hit, And when the market sold down from all-time highs in the third week of February to uh, down 20, over 20%, 25%, and I think some cases 30% to the March lows, Amazon traded below 1700. So Amazon had almost doubled off of its March lows to where it was today on an intraday basis at $3,340 a share. It went out at $3,100. It's had a monstrous move off the lows. It's had a monstrous move just in the last couple of weeks. So I don't I don't think it's um, that alarming to see the selling that we saw in some of the big momentum names in Nasdaq and that are really the backbone of the internet traffic trade today. It'll be very interesting to see how they do the rest of the week. And one of the reasons that we really like volatility in terms of helping us uh, put the market in perspective, maybe not the volatility that we saw in late February and March and early April, but one of the reasons we really like volatility is because it helps us define support and resistance levels for the market. So I, and because when things get crazy and very volatile, it's very helpful to see where the relative strength is uh, on days when you have big price moves. So where was the relative strength today? You're probably going to be able to guess that when you look at the S&P 500 sectors, communication services down 2%. That's just about what the Nasdaq did. Consumer discretionary, that's been one of the drivers of the rally. In fact, it was the best acting sector of the S&P 500 last week, down 1.7%. Infotech, that's part of the internet traffic trade, down 2%. Where was the relative strength? Well, financials, even though they're going to have rough second quarter earnings tomorrow, the second quarter is earnings reports are always a little bit in the rearview mirror. The second quarter earnings reports are really in the rearview mirror this time because for most of the second quarter, the economy was in complete shutdown. Financial services stocks were a little bit positive, up 0.3%. The Dow was pretty much flat, up 10 points, which is as flat as you can get for an index that's at 26,000. The industrials were up 0.4%. The industrials have trailed the rally the last 2 to 3 weeks. And healthcare was up 0.5%. Healthcare is a little bit of a defensive sector. So you didn't necessarily, and it has not participated with the exuberance that some of the other sectors have. So that's, that's, I think, a reasonable thing to see on healthcare. Now, again, most of the selling took place in the last 2 hours, maybe the last 2.5 hours of the day. If you pull up one of the charts, you can and see an intraday chart, you will see this large spike down. A lot of people were saying it was because of the news out of California that they were going to shut down. Look, all the news on the virus in terms of just raw data has been heavily tilted on the negative for really all of last week. Okay? Cases are up. Positive cases are up big in Florida, in Texas, in highly populated parts of Arizona, in the Houston, Austin, Dallas County area of Texas, in the high population parts of Florida, and in Maricopa County, where Phoenix is, where most of the population of the state is, and also in pockets of California. So the positive side of it is that the hospitals do not seem to be near capacity, and the death toll from the virus has not spiked as the positive counts have. Now, the caveat is that the pattern 2 months ago, 2.5 months ago, was you get a spike in positive cases, you get a big increase in hospitalizations, and then you have the death count go up. I think there's some reason to believe the second two won't happen to the same extreme that we saw in March and April, because most state and local officials realize that it's critically important to protect the elderly and people who are most vulnerable toward the virus being a very, very serious health issue. And also, it's very possible that a much lower percentage of the people that test positive for the virus are going to be requiring hospitalization if they're much younger and healthy. Where the average age of the people that tested positive for the virus going back into March and April was probably above 50, maybe above 60. I think the average age, from what I've seen now, of people testing positive is between 35 and 40. Now, we'll have to see how this plays out. But for right now, this is a pretty significant 1 day. Look, the selling was much more extreme off the highs of the day, when you had the Dow come 2 points off its high, 2 percentage points off its highs of the day, to settle unchanged. The NASDAQ, which was up 2%, closed the day down 2%. That's a 4% reversal. That's a pretty hefty reversal off the highs of the day. When we had the big sell off June 11th, I think the NASDAQ was down a little, about 6% that day. Okay. So we're not taking this lightly, but it's 1 day off uh, in a market where pretty much everybody would say, yeah, okay, these stocks were really extended. All right. So, I think that the things to look at tomorrow that will be very important are crude oil. It went out about, I said a little over 39.50. It went out at 39.70. And if crude oil kind of holds its own, maybe it goes down a little bit. Maybe it tests 39. We'll see if we get additional headlines out of the OPEC Plus crowd or not. And then we're going to want to watch these stocks that have been the backbone of the big internet traffic trade. Amazon, Netflix. I think Netflix reports earnings either tomorrow or the next day. I think it's this week. I'm not sure exactly what day, but we'll have to we'll have to watch that. And Apple, Amazon, Microsoft, you know the names. We'll see if the big selling that we saw today, the big momentum stocks, and look, Tesla was probably a stock. I don't know exactly what the price was 2.5 weeks ago. I know it's just been absolutely ridiculously on fire. I had a very good question in the chat on Saturday about, how extended is Tesla, da, 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 da. It's extended. There's no doubt about it. But things like Tesla, it's a little bit of a, it kind of trades on a mind of its own a little bit. Elon Musk is a very unique guy that's been wildly successful. The optics on him from a year and a half ago, when the SEC was investigating him and he was making really kind of irresponsible comments on Twitter almost every time he'd turn on his computer, to where the optics on him the last 2 months are night and day. The whole SpaceX episode was wildly successful, a big positive optic for him and all of his endeavors. And there's no doubt that a lot of people view Tesla as having truly revolutionary technology. They're not really looking at the valuation of it right now. They're looking at how it can help transform the automobile and motor vehicle industry over the next 5 to 10 years and beyond. Okay, so it's become a little bit of a cult stock. Some people would say that's the word I was looking for about 3 or 4 minutes ago. If you could tell, I was looking for a word, I couldn't think of it. It's become a little bit of a cult stock. Okay, Amazon was a little bit of a cult stock 10 years ago when people kept buying it and they weren't making money, weren't making money, but Bezos kept investing ridiculous amounts of money in the infrastructure. There were massive amounts of doubters. People would constantly say 10 years ago, how can this stock keep doing this? They're not making any money. Well, guess what? It paid off. I'm not saying Tesla is going to be a repeat uh, stock performance story of Amazon, but people have a little bit of the same added the big dough investors that are buying it have a little bit of the same attitude toward Tesla that they had toward Amazon 6 to 8 to 10 to 12 years ago. Okay, but and also starting tomorrow, earnings season is going to be big. We're going to have the big banks right out of the chute early in the morning, and I mean by 7 o'clock, 7:30. You're going to have earnings from J.P. Morgan, Citigroup, Wells Fargo. The following day, Goldman Sachs, and on Thursday, Bank of America and Morgan Stanley. Um, so it's again, and with a lot of these companies, it's going to be what they say about what they see in the business climate, what they see in terms of potential loan loss exposure, and what they see with consumer debt. Although all the data really on consumer debt is that consumer debt levels are at their lowest level since 2017. I think that's because people have been spending a tremendous amount of time at home, and with extra cash that they have, they've been paying down their credit cards a little bit. Um, but the you know the banks have not been a leadership group in the market for many years. They're much more highly regulated than they were before all of the Dodd-Frank regulations kicked in. Let's say 10-ish years ago. They still have to go to the Fed and or the Treasury to get approval on raising their dividends, increasing their stock buybacks, et cetera, et cetera. But they are still right in the apex of everything that's going on with the economy, with big business especially, and they'll have their finger right on it in terms of what exposures there out there in the corporate debt world. Um, so that's kind of it. I see one comment in the squawk here from John. LOL. Robinhood 401k accounts bought Tesla today. See, it's a little bit of a cult stock, and I think that the Robinhood app, the Robinhood brokerage, is something that's very, very popular with millennials. Um, and I would imagine that the concept of Tesla is also very popular with that age group also. Um, I don't have a lot else right now. I have a dentist appointment late tomorrow afternoon. There's very likely that there will not be a broadcast tomorrow evening, depending on when I get back from that. I'm not going to do it after 7 o'clock because I think a lot of people are going to be following the Alabama Senate primary results, where there's been a big splash in Twitter about Jeff Sessions running for his old Senate seat, and Tommy Tuberville, the former Auburn football coach, probably coached at a couple other schools also, running against him. I think Tuberville seems to be up 8 to 10 points. Some of the real hardcore conservatives have issues with some statements he's made on immigration. I think it's a way overblown topic. I think he's probably going to win that. I think that although he's a little bit of an unknown politically, he's got great name recognition in the state. And if you've ever heard an interview with him on topics other than college football, he is a very smart, very well read guy. Has the total endorsement of President Trump. And I just think that Sessions is uh, very damaged goods for way too many people that will be voting in the Republican primary in Alabama tomorrow. But if that wasn't there, I might do it at 9 o'clock. But I'm probably just not going to do it tomorrow. If there's anything big, maybe I'll do something quick during the day. But the next broadcast will probably be Wednesday at uh, 7 p.m. If you like the broadcast and if you haven't subscribed already, please subscribe to the Anderson Report YouTube channel. It also goes out to my Periscope, TJ Anderson 12, not to be confused with my Twitter handle, TJ Anderson 1. I am Tim the Source Anderson. Thank you very much. Please like the channel. Please subscribe to the channel and like the broadcast. And we will see you all in a couple of days.